everyone, this is Rob Roy and welcome to the Elliott Wave Options S&P 500 US market update. Well, it's basically make or break time in the markets. Let's take a look at the charts and I'll show you what I mean. Before we look at the charts, we all know that the economic data is going to be really bad, but I thought I'd share with you how bad. Here's the retail sales report that came in for the month of March, and you can see that it's just off the charts bad, basically the worst reading in history. If you want a little bit of correlation, you can look at where the number came in back in the Great Recession, bottoming out in 2009. We blew that away. So were people buying anything? Well, basically they're buying food and beverage. That's about it. A few other things here, personal items, little bit of building materials, people staying at home, fixing up the home a little bit, but not much else. All right, so let's take a look at the charts. As I mentioned in the intro, it's make or break time. We've been talking about this for the last several recordings. We had this big move to the downside, so let's bring in that fib retracement level again. And you can see on the big impulse move to the downside, which we all know is a zigzag pattern, complex zigzag pattern to the downside. We bounced up. We gapped up a little bit on Friday, so you know how I feel about gaps. So we got this little gap to fill here. But are we going to make it up to the 61.8% level? It looks like that is going to happen at this point in time. Then we find out. That's my favorite zigzag. When you have a big impulse, A to the downside, the B corrects 61.8%. That's my favorite zigzag pattern to the downside. And we've talked about where a potential low could be. And certainly the wild card here is going to be not the sentiment indicators. The sentiment indicators aren't nearly as bad as you would think. The Investors Intelligence Survey of investment advisors has rebounded. The number of bulls has rebounded considerably. A lot of investment banking firms last week came out and they're bullish on the market. Bill Ackman, the guy that said hell is coming, said he was turning bullish. And the one that I watch a lot is the put-call ratio. The put-call ratio measures exactly what it says, how many puts are bought on a daily basis to how many calls. So the level, if you're not familiar with the indicator, break-even is 1.0. That means there were the same amount of puts bought as calls that day. So if it's less than 1, more calls were bought than puts because it's the put-to-call ratio. If the reading is above 1, more puts were bought than calls. And at this point in time, the reading closing on Friday was 0.92 for the total put-call ratio, but on equities only, equity options only, it was down at 0.6, which means there were a lot of people buying calls, a lot more people buying calls than puts towards the end of the week. In fact, I had to go back to April 3rd to find when the put-call ratio was above 1, meaning more people buying puts than calls. And here's the chart of the VIX. You can see the VIX has come down considerably. We're back under 40 again. We still have this pretty significant descending triangle, so it'll be interesting to see how the VIX plays out of that. But those things will play into the market. But I think the big wild card is the Fed. If the Federal Reserve comes in and starts buying equity ETFs, it's about the only thing they haven't said that they are buying. But Japan has started doing that. Japan's central bank is literally buying equity ETFs. If they do that, then we could blow through that 61.8% level and move to the upside. And the next level, that 78.6% level, is right here. So if the market does go through this, and I think we'll struggle here, it'll be a point of resistance whether we head down from there or not. But if we make it up to this next fib level here, then that means that the downward zigzag scenario is off. It's no longer a qualified pattern, and we don't look for the potential to even test or make new lows at that point in time. But we're a ways away from that. We'll see how that plays out this week. Looking at oil, oil had an ugly day, and it's going to be an ugly day on Monday as well, with the fact that oil is down around for the May contract that expires Tuesday is down around 15 and change right now. So it's going to be another nasty day there. In fact, as far as the market, just to give you the timestamp, the futures right now at this point are down 18. They opened down 25 a few hours ago, rallied up to break even, and just really not doing a whole lot at all. I thought I would update you on the triangle patterns that we mentioned. Nothing really has broken out yet, but they will. And there's that descending triangle pattern on TBT. Here's the 10-year bond. Looked like it was going to move. Didn't. just forming a larger triangle here. So that one's still there. And same thing on the dollar. Dollar's a little firmer at this point in time, so it's bouncing back a tiny bit, but not a whole lot going on. So nothing really is broken out from the financials at this point. I wanted to show you that chart of Amazon that I mentioned. Looking at the retail sales, it makes this even that much harder to believe, doesn't it? Now, earnings are coming up for Amazon. Of course, a lot of people feel they benefit from people staying home and ordering, but people aren't buying a whole lot of anything. But to see Amazon go vertical that far above where we were before all of this coronavirus stuff started is really fascinating to me. And you can see that we are clearly in a wave 3. If we look at the moving averages, we're overbought from the 10-day moving average. So we probably will back up a little bit, maybe come back down and even test this little point of support here. We'll see how that plays out. But I just thought I'd share that with you because I find it fascinating and really difficult to believe. But this is a big week, make or break week. Hope you've had a good weekend. Be back to talk to you again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.